phase until we reached this peak phase here. And the belly never went in our favour. Not once did the belly actually give us an edge to sell. Not once did the belly give us an edge to sell bonds. And for that reason, it was always a struggle. Because obviously we've got to try and look at it from different angles. We've got to look at it from the front end of the curve angle, first of all. And the front end of the angle of the curve, the front angle that we get from the curve read is that the bond price should have exploded sell side massively. So we've got to be looking at it and saying, well, come on, seriously, if I can't make money on the shorter bonds here, you know, the rational angle of bonds and yields are just, they need to tie back together again. It's one of those things that needs to tie in, is how these things behave with each other. And if bonds and yields are going in the same direction, it doesn't seem to make an awful lot of sense for very long. So when we're looking at this bond price should be at least $1,000 to $1,500 lower, Nessie. At least $1,000 to $1,500 lower, based on the front end of the curve. And I'm talking about the ZB contract, not the Ultra Bond. So it's a huge twist in the belly. Huge twist in the belly just now. And for that reason, of course, we've just got to be careful. But it doesn't take away the fact that it is still the right trade for duration to be short bonds. All we've got to do is make sure we know what is going on. We know what the belly's doing. We know how much pressure that's going to apply to our position. And we don't hang about if the price goes against us. We don't trade, and we don't trade passively in terms of simple levels that don't make an awful lot of sense, so we don't just sell again at the same price. We let it go higher because the belly is telling us to let it go higher. So what we've got to do is let it go higher again, and we don't trade against it. We let it go higher again, and then we sell. And as we sell each time, guys, we're selling at 21s, we're selling at 20s, we're selling at 28s. Anybody see anything interesting? 20, 28, 02s. Does anybody see anything interesting? These ideas, trying to get that price moving, that little bit of movement, that idea that the bond price should go 8 ticks or so against a particular price level, those ideas, bringing them into this trade idea as well. And you can see the bond has actually just completely cleared that 18 print now down to 13s. I told you we should be trying to get that extra bit of business away from this area. We should be making a lot of money on this trade. And we just had to do a lot of work. In fact, a lot of the guys will remember I said this morning, they're probably trying to keep this bond as high as possible for the US Open. And that's exactly what they've done. They've tried to keep the price in check up at the top edges. They've kept pressing, but it's paid off eventually. You can see we've ended up with a brilliant sell trade. Not the best we've ever seen, but you can see that we're now on our way to this target price down at 9s here, which obviously would be pretty good if we can get to that price. We've now went from 159.02 to 158 and 158.5 on the ZB contract, and if we can get a little bit more, we'll take a little bit more. It's a good one, guys. It's a good one. Oil buy-side bounce on the basis of the inflation break-evens, of course. And oil's managed to find that buy-side bounce beautifully in line with that inflation break-evens. Big sell-off on gold. Not really a surprise. You might say, why? Well, we gave that level out this morning, didn't we, Paul? We gave out that level this morning for anybody that was paying any attention to the bit of business that we were talking about. It's called the RGL. It's called the London Metals Open. We drew 2 lines on the charts to allow you to understand where we were looking to deal. And these are the 2 lines here. The first one is the RGL from last night. The second line is the London Metals Open. And you can see that those are the two lines that we were focused on in terms of a red-green area. Green side above, red side below. And you can see that from that red side below, which was at a price of 1805s, it's now dropped to 1785s for $2,000 downside press. $2,000 downside move, guys. That's pretty good. In terms of bracket measures, you can obviously, the latest one was this one here. So when you look at that latest bracket there, you would have been able to do a measure against that. You have already achieved that target price, so that should have been a nice location for you to book some lovelies just into that move. Also, it ties in with the $2,000 target. And that's a great move. You can see that the prop stops, because the prop sellers came in, the prop stops will probably come in here. The prop stops did come in here. We got the half-back pullback just there. And then the target price, and then the press through to close, and that's the bottom of the gold market right there. What a trade. Why was it a trade? Well, let's take a look at what actually happened in terms of real yields. Let's take a look at the China, for example. First of all, let's take a look at what China did. Because the Chinese storyline was one of two-way money initially. And they didn't really do that. Now, these guys should be active in the overnight sessions, so we should see a lot more of whether they're buyers or sellers coming in from this. So they're not really seemingly involved in this. Let's take a look at metals. You see, metals, not really that involved. They were certainly bearish early on, but they simply picked up some business here, and they seem to be about fair value as well. So metals are giving us a fair value read on this as we go forward. Let's take a look at the dollar. What a storyline. What a storyline. When you see that, you think to yourself, wow, it's only really a sell, isn't it? It absolutely is only really a sell. When that looks that good, you've got to start recognizing something needs to give in terms of the gold price. What about real yields? Well, what about real yields? Real yields were very bearish in the overnight session. They adjusted somewhat back in the session here, but when they adjusted, this was the perfect sell on gold, wasn't it? Because if the real yield was doing this, somebody was accumulating off those RGLs, absolutely accumulating off those RGLs, weren't they? Somebody was busy, somebody was active, somebody was doing some real money business up here. So what happened? Let's take a look at the short term. What happened in the short term is that the real yield actually diverged. It wasn't bullish gold at all, was it, in the short term? So if the macro was bearish, and then the micro had been bullish, but then the micro goes bearish as well, and we are at those key levels, you've got a great opportunity to start selling into your gold at that price. And the sell away from gold at that price has been sensational. Real yield diverging and into the bottom edges here as we reached into target price, so probably a very good reason to take some profits off it. Very good reason to take some of your gold profits at that stage, and the price just kind of jammed around and didn't do very much after that. So pretty nice, pretty good. Metals, copper and platinum, yep. Yeah, they're the only two that have a regular price quote that gives us an idea. Well, guess what happened, guys? We hit target on bond. You wouldn't have thought that was going to happen today after the drudge we had to go through this morning. So there we go. Profit target on bonds. Boom. Beautiful, right? Lovely. Well done, guys, for your patience. Well done for whatever it is you had to employ to get to that point. But we got there eventually. And that was a struggle. Big struggle. It wasn't actually that big a struggle, was it? It was actually quite easy to make money on it, but it was just slow. It was just slow, and that's where the struggle is, because when it's that slow, guys, it's a real problem for people. Dealers did a great job. I mean, you know that the dealer was obviously very, very long, early diddles, and they had a great trade. They'd managed to get a lot of business, and they made a fortune because obviously they just kept the price going higher and higher and higher. So whilst they didn't get the huge throwaway by the sellers that they might have wanted, it doesn't make much of a difference. They managed to get price action well away from that price level. So the dealers did a great job on that one, because they should never have been able to get the price to go up like that, never in a million years, and yet they did. And I keep saying that this is one of the reasons why we did this whole classroom, to try and get you guys excited about it, to try and get you guys to understand it. And as I said, when I was talking about it this morning, it was tumbleweeds, absolute tumbleweeds. And it was like, well, you don't see how significant this can be. Well, that would have saved you a huge loss on the NASDAQ. It was over 100 points, Mike. NASDAQ, 15,580 to 690, 700. Nearly over 100 points. Nearly over 100 points profit. Nearly over 100 points. It was over 100 points profit. You're making thousands by following yesterday's classroom. Thousands of dollars. And still we get tumbleweeds.